what you've really got is a not really a perfect storm against gold, but a combination of things that has given it pause. When you look at that in its entirety in the round, you could argue, very much so, the gold is not doing particularly badly compared to where it could be in relation to what's been going on. And so I think in very many respects, I would regard gold as somewhat of a sideways move at the moment rather than decline.
Bitcoin being hit hard right now, they're being battered. If that continues, do you think that takes the people that are looking for something that is gold-like back to gold if they can't get that same thing in crypto?
Historically, when stocks are underperforming, investors turn to gold. It was even customary for investors to hold some gold assets as a backup for tough times. Cryptocurrencies have disrupted this tradition. Investors now see cryptocurrencies as a convenient alternative to gold. With Bitcoin crashing at an even greater rate than traditional stocks, investors are beginning to contemplate a shift back to gold. In today's video, Lyn Alden would break down the relationship between gold and Bitcoin, and why one is better than the other. Give this video a thumbs up and subscribe to the channel.
Yeah, so obviously gold has the much longer track record, and it works. Even if the internet goes down, I mean, you can still use gold and silver to transact. It's basically gold is the highest stock to flow ratio commodity, meaning that the supply inflation rate per year compared to the existing estimated stock that exists is very low, something like 1.5% per year on average of supply growth. So if you imagine a money that had a 1.5% supply inflation rate, broad money supply growth over the long term, that'd be a pretty attractive money compared to most other currencies. The dollar grows on average something like 7% per year. Most emerging market currencies grow much faster than that, whereas gold is basically this very slow supply growth currency. And it's something that there's no central authority that can just print more of it, and so that's why it's had this very long track record of holding its value. Plus, it's nearly indestructible in the chemical sense. The shortcomings are basically its portability and speed, right? So you can't use gold to transact with someone in another country unless you abstract it in some way. It's basically only suitable for local commerce.
The stock-to-flow ratio of a commodity is the ratio of a new production of a commodity to an existing supply. Scarcity directly determines the value of a commodity, so that when there's a surplus supply, the commodity suffers devaluation. The stock-to-flow ratio, S2F, of gold is very low. Supply has averaged only 1.5% annual supply, while the dollar supply has been increasing at a rate of about 7% per year. Because of gold's low S2F, it has continually gained value against the dollar. Lyn Alden believes that Bitcoin could benefit from this supply mechanism. Bitcoin has a maximum supply of 21 million coins, and since the supply ratio halves every 463 days, Bitcoin is designed to be continuously scarce. Charts have shown that Bitcoin value has correlated with the SF ratio, which makes it poised to rally as its supply diminishes. Besides having a lower stock-to-flow ratio to benefit from, Lyn speaks further on other features that give Bitcoin the edge over gold.
Whereas Bitcoin, there's multiple advantages. One, it's basically it's as scarce as gold, but then it moves as fast as fiat. You can settle a multi-billion-dollar transaction in an hour. Basically, it depends on how much confirmations you want to wait for. But basically, it's a very quick network at coming to a final settlement for all practical purposes. And then with things like Lightning, you can do these instantaneous payments on top of it. And so it's basically this very efficient system that in some ways combines the strengths of both fiat and gold, with the downside being that because it's open source, anyone can copy it. And so kind of like how gold is sometimes under threat from, say, paper claims on gold, people that think they own gold, but that, if kind of the music were to stop, not all those claims are maybe tied to an ounce of gold. You kind of see the same thing in Bitcoin in the sense that, you can have literally tens of thousands of altcoins come around, and then that can dilute market share and market and network value if that kind of persists for a long period of time. And so basically it has a fight for market share among thousands of other alternatives.
Gold is faced with several challenges, such as cost and time of verification, cost and time for transactions. Lyn says Bitcoin solves these problems. Unfortunately, the stock-to-flow supply advantage of Bitcoin is diluted by the general crypto market. The supply of Bitcoin may be dropping, but the number of cryptocurrencies are far from declining. Cryptos are not getting scarce. Instead, the market is bloated with the humongous supply of various cryptocurrencies. So much that in just 13 years of Bitcoin, there are now over 20,000 cryptocurrencies on the coin market. Lyn believes this ballooning in the number of cryptocurrencies has been a weight pulling the price of Bitcoin down. Though Bitcoin holds about 37% of the almost $1 trillion crypto market cap, Bitcoin's market share has only been on a decline as competing cryptocurrencies keep innovating and giving investors more choices in the crypto market.
It's only a 13-year-old asset. There's always risks of bugs. There have been some bugs in the past. One thing I like to point out is that Bitcoin, it's had 100% uptime since 2013, which not even Fedwire has. And so it's a shockingly robust system, but it's not without tail risks and bugs that could, disrupt it. And so, I think that in many ways Bitcoin is an improvement on gold, but it's not superior at every possible variable. There's still kind of a role for gold as well. Using gold in any sort of economic sense does have an ongoing cost because it takes time and energy, various types of resources to move it around.
A military, guys with guns.
Yeah, you need. Yeah. I mean, when Germany wanted to repatriate its gold, this ended up being a multi-year process because obviously, it could have been done faster than that, but it's basically a complex process to move a lot of gold a far distance and then to verify it all. When China buys gold from Switzerland, if they buy like the old type of gold bars, they want to remelt them down into a new type of gold bar, partly because that's one of the only ways you can fully verify that down to its core, it is exactly what you think it is. And so the ongoing cost of storage, transportation, and repeatedly verifying that it is indeed gold does have an ongoing cost. And so, there is some truth to the fact that, if you have, say, gold in your house, that is, that's there for as long as you want it to. It is what it is. But the actual, quote unquote gold network does have an ongoing energy cost.
In February 2021, the Fedwire network went out for several hours, halting its operations. This had happened before, and it was not unexpected that this happens occasionally, even though the Fed has a robust system and private backups to keep the system running. Bitcoin, on the other hand, has since its 13 years in existence never gone offline. This does not make Bitcoin a 100%, as Lyn admits the system has bugs and is not perfect. Do you agree that Bitcoin is a better alternative to gold, or gold remains the safest asset in market crises like this? Do you think altcoins would continue to eat deep into the value of Bitcoin, possibly to the level of sending it into oblivion, as they seem to be improving on the weaknesses of Bitcoin? Leave a comment below. Don't forget to like and subscribe. Thanks for watching. See you again.